let's talk about Apple right now. What do you think is behind the recent weakness over the last few weeks?
Yeah, so I'm actually encouraged because I think for the first time in a long time, some of the risks for Apple are starting to get priced into the shares. When you think about, are we in a global trade war or are we on the verge of a global trade war when it comes to Trump's tariff policies? And in particular, you think about a trade war with China, which is a high teens% of sales and still where Apple manufactures most of their devices. I'm actually encouraged that the stock's starting to price in some of the risk.
So, Tom, when we go into the next earnings release, are you expecting some weakness in China and some weakness that's already priced? Because we did drop another 11%, close to 11% last week alone.
Double-digit declines in China in the December quarter. And the concern would be that a prolonged trade war with China would inspire more consumers in China to buy from Huawei and not from Apple. Add to that the fact that Apple's been unable to roll out their AI feature set in China, and I think you're going to see continued weakness there.
So, Tom, what would make you actually be enthusiastic about this stock, given that there are a lot of fundamental challenges and you're encouraged by a 14% drawdown so far this year, but not really changing your hold rating?
Yeah, so Lisa, what would get me more excited is Apple still generates a ton of free cash flow. And generally speaking, when they report the March quarter, they update their returning capital to shareholders policy. So I think lost in the shuffle on the Trump tariff policy is Trump's tax plan. And when you think about Apple, and they pointed this out when they announced their $500 billion investment in the U.S., that they're one of the largest taxpayers in the U.S. And a prolonged period of lower tax rates means more free cash flow and a greater opportunity to buy back stock. That gets me, excited, I guess.
So later this year, you could see, if those tax cuts get extended, that there could be some sort of stock repurchasing that maybe, you guess, could get you excited or move away from a hold. What's your concern level about some sort of tit for tat between the U.S. and China, roping Apple into it and make Tim Cook have to choose in a way that the ultimate diplomat just hasn't had to do yet?
So historically, as you pointed out, Lisa, he is the ultimate diplomat, CEO by day and diplomat by night. Does an amazing job balancing the company's relationship between the two countries. Elon probably second best with Tesla. What would get me more excited is evidence that that there is an upgrade cycle as it pertains to AI. We haven't had that evidence to date, given that they rolled out the new hardware the 16th of September, and they've been rolling out the software piecemeal with the AI feature set, and you haven't seen very good Apple iPhone sales. So maybe as the year progresses, you start to see evidence of an upgrade cycle, or at least better than what we're expecting right now.
Tom, let's think about the backdrop for this decline, particularly over the last 2 weeks or so, and for that matter, over the last several months. We've seen a major sentiment shift away from the United States to Europe to China. And with that, multiples have had to come down. And Tom, I just wondering if you can go beyond just a single name coverage just for a moment, just indulge me. Do you think there is a possibility here that perhaps the scarring from several events over the last couple of months could be long-lasting, that maybe the willingness of investors to pay up for US equity names, particularly US tech and major tech names, that willingness might not be there through the rest of this year?
So the argument against that, Jonathan, would be that the US has been the source of most of the globe's major tech companies. Yes, you have Alibaba, Tencent, and some other giants in China, but you're talking about Apple, Amazon, Meta, Facebook. Sorry, Meta and Facebook, same thing, Google. So the innovations come out of the US. The multiples, I think, will follow the innovation. And there's reason to believe long-term that the US will remain the epicenter for tech and for stocks in general.
I guess what I'm getting at, Tom, is how much of this is really about tariffs? How much of this is really about still dealing with the fallout from the DeepSeek revelation from the back end of January?
Well, the problem, Jonathan, with the DeepSeek revelation is that every major US tech firm basically reaffirmed that they're going to spend a ton of money advancing their AI efforts. So I think that we should expect there to be competition, especially from China, for AI. Let's see how Amazon, Apple, and others ramp their AI efforts. And if the CapEx spending is worthwhile, I definitely believe for Amazon it will be. So let's see how things play out.
So what do you have to see to actually raise it to a buy at a time where potentially there are all of these headwinds, there is competition, there is the upgrade cycle, and at a certain point you also just have structurally higher rates potentially that could impact valuations?
So it is possible, Lisa, that the stock just trades down lower, so there's more upside to our price target. So, the risks getting priced in to a greater extent. Love to see signs of improving sales in iPhone. But again, they generate a ton of free cash flow. We haven't talked at all about their services story. That's very compelling. That's where all the upside came in the December quarter. They recently added Apple TV to Android devices. So I think the services story is quite good still, higher margin than the hardware. So there are things to like. I just would like the shares to get priced in a little more risk.
There's also a concern longer term, and this is something that Peter Scheer of Academy Securities raised over the weekend, that as the trade wars drag out, that Americana brands, the ones that really represent the United States, will get penalized in foreign sales, akin to what we've seen maybe in Tesla anecdotally. Do you believe that that is something that could pose a challenge for the likes of Apple, which has traditionally been associated with Americana?
The answer is absolutely. And really the worst example, Lisa, is the Canadians taking the American liquor off the shelves, essentially. So yes, I do think that a prolonged trade war, nationalism, consumers in China buying from Huawei instead of Apple, brands that are associated with the U.S., even though there are global brands like Apple, having negative views outside the U.S. on a prolonged trade war, that's certainly a risk.